Hello, folks. Welcome to the Weekend Investing Daily Bite of 15th of April. We have a short week. Monday was a holiday and Friday again is a holiday. So we have a 3-day week. But what a start to this new 3-day week. Markets on fire. We are getting the benefits of the, you can say, the mellowing down of the tariff war to some extent. Trump diluting the tariff on computers, electronics, and semiconductor chips over the weekend, and that's almost 25% of exports from China to US is that sector only. So effectively, 1/4 of the tariffs were written off again. So earlier, 90-day period to all other countries and likely 10% tariff, and now with China also, I think US uh, has taken a step back. It surely is showing that country in very poor light, but they've realized in quick time that they can't survive like this. And China, in fact, on the other hand, today has fired a new salvo by freezing the deliveries of Boeing jets. So, if China wants, it can bring USA down to its knees. Today, we are going to do a 101 class on bonus and splits. I know some of you probably don't need this, but this is something that the companies do often to create a buzz, to create a FOMO, and also to just fool a lot of folks. So we'll go to the uh, bottom of this for especially for newer investors to understand this. Disclaimer: please read this fully and understand this. Do subscribe to the channel if you haven't so far. So where is the market headed? Nifty up 2.19% in just 5 sessions. We've gone from 21,700 to 23,300. If you had asked me 5 days back that will be in next Monday, will next Tuesday, will we be at 23,300, I would have said, I really can't say. I don't know. But that's how the market plays. And this time around, the move has been very, very fierce. You can see that it is almost a vertical move, sharper than this move also. So maybe we'll find some top. We may, make a higher bottom the next time we bounce, and then the real trend may start. So, but good thing is that we are not seeking new bottom. So we are again at that same point where we were in November, and 5 months of consolidation has gone by since November, and of course this fall was there prior to November also. So all in all, I think not such a bad deal that we have right now. But I want you to reflect back on these last 6 months, how people have really thrown in the towel, and people are calling all kinds of lower targets of Nifty, and Nifty continues to try to survive in this near 21, 22, 23,000 zone. So nobody really can predict where the markets are going. And the prime example of last 5 days is nothing short of a complete slap on a lot of folks who were looking for much down moves. Nifty Junior up very strongly at 3% for the day, back at 63,000. Mid caps up 3%, again coming back fully after that drop. So the tariff tantrum has been fully now discounted already, and people are talking about it's going to take months and years to do that. But the market so far is discounting it. Whether we fall back again is another matter. But for now, the entire damage has been recovered. Small caps also up 3.06% and tantalizingly close to this recent high. Once and if these recent highs are broken, there will be more people who will pile onto the market. Bank Nifty also up 2.7%, but you can see that Bank Nifty has already crossed that point where your 52,000 mark that was created end of March has already been crossed. So these are very good signs from a charts point perspective. Gold is up 0.22% for the day, nothing much, but after that heady move, still standing very tall, nearly 94,000 plus. I think that's really good. Market breadth 473 advances. So last 2 sessions have been phenomenal in terms of market breadth. Heat maps are all green. HDFC, ICICI Bank, Axis Bank, banking space really firing hard. IT also not bad. Autos doing very well. Cement and steel doing very well. Energy is doing very well. Virtually, FMCG is the only slower one out there. Otherwise, everything was racing up fast. And the Nifty Next 50 space was on complete steroids. DLF up 6%. ICICI General Insurance 6%. Lodha 8%. I mean, crazy kind of moves, and it is telling you that with each fall, with each drop now, people are getting more and more confident that we are nearing the end of these falls. So that's the reason for such rapid moves. In the sectoral trends, real estate stood out with 5.6% on this index. This index has been falling in the last 1 year. Index on real estate is down 11%. Capital market is up 35%, but for today, real estate is really doing well. Capital market also did quite well at 3.9. Defense stocks coming back at 4.4, and financial services along with metals came back. FMCG, as I mentioned, is the weaker one out there. Uh, just amazing runs on real estate, Anantraj, macro tech developers, prestige. Also because the interest rate cycle is looking to go down, and that is fueling this kind of a rally. And a lot of narrative in the markets always remains negative for real estate for whatever reasons, and people always continue to say that real estate prices are not real, and that they will fall, and a correction is around the corner, or some peak has been made. But continuously you are seeing that real estate prices have strengthened, and that is not just a feature of this cycle. I mean, whenever you will find that the world is grappling with you know situation of inflation, which we are right now, and real assets, gold, real estate, all these start to fly. There's a sort of a tailwind that happens to these sectors. And people have made money in the last 5 years in equity, and they will buy their houses and other asset classes. So let's come to the topic of the day. Bonus or split, here's how you are being fooled. So very simple example: Raju is a retail investor, and one morning he reads a headline that the ABC company has announced a 1:1 bonus, and he gets really excited about it, because in his mind, bonus is something, as the word suggests, bonus is something free and something additional. So the bonus word is usually used for something extra. So the misuse of this word is being done here, where the connotation of the word bonus is being uh, the narrative around it is that you're getting something new, something extra, something additional. So you are getting benefited. So the conventional thought process is we'll get twice the shares, or portfolio value will go up. That kind of a, especially for people who are not aware of these things. So this word bonus is actually not a bonus, and we'll see how it does not, in reality, does not mean anything in terms of bonus wealth. So your share count doubles. So if you give somebody 100 rupees and take 250 rupee notes back, that is not a bonus. It is just rearrangement of that denomination. And share price drops by half, and total value stays the same. So effectively, a bonus issue, minus the buzz that gets created for a few days around it, because people want to play this mischief with others who don't know about this. If you remove that on a more larger basis, there is no change for the value of the stocks that you hold, or the is the very good example is the pizza example, where if you cut the pizza into 4 slices versus 8 slices, the pizza remains the same. But optically, if somebody is told that for 100 rupees you'll get 4 slices, but for 100 rupees you can get 8 slices, uh, you know you get fooled into 8 slices. So let's understand with real example what is happening here. So bonus issue is the distribution of free shares by the company to existing shareholders. So if you are holding shares of a company and that declares a bonus issue, you will get some free shares from the company. And that company, basically, instead of handing out dividends with their reserves and cash, are moving that reserves into a share capital account and issuing more shares. So if earlier there were 100 shares, perhaps there is now 200 shares, so the value of each share drops, and effectively nothing changes. So if you were to see it in a tabular form, let's say you had 10 lakh shares outstanding of a company, and let's say stock price was 200, market price was so much. face value was 10 rupees, share capital was 1 crore, reserves were 5 crores, P ratio was 20. Now a 1 is to 1 bonus has been given. So the outstanding shares will, for every share held, you will get one additional share. So share capital will go double. So here you can see share capital has gone from 1 crore to 2 crores, but reserves and surplus have gone from 5 crore to 4 crore. So it is just an accounting entry that has been moved. Stock price will half because number of shares have gone up by 2 times. P ratio remains the same. Your earnings per share will also half because number of shares have gone up. So all these metrics will change. Face value will remain same, P ratio will remain same, and the reserves and share capital together will remain the same. So whether it is 1 is to 1 bonus, 2 is to 1 bonus, 3 is to 1 bonus, the number of shares will change, earnings per share will change. Of course, net profit of the company will remain the same. Stock price will change as per the number of shares outstanding. Market cap obviously will remain same. Face value will remain same. Share capital will go up as more and more free shares are allotted, and reserves will go down in the same ratio, and P ratio remains the same. So bonus is basically a good way to please your shareholders while nothing changes really in the company. Stock split is another variant where you don't mess around with the reserves at all, and you just change the face value of the stocks that are held. So uh, the if the face value is 10 rupees and you do 1 is to 1 stock split, uh, it will become face value 5 and nothing else changes. So stocks will become double. And you can see in this example, let's say again 10 lakhs shares were outstanding, and you did a 2 is to 1 stock split. So 2 is to 1 means for every one share that was originally held, now you will have two. So 10 lakhs will become 20 lakhs in share outstanding. Of course, net profit, no change. EPS will half because number of shares have gone up. Stock price will half. Market cap remains same. Face value here will be halved. Here you will see that reserves and surplus and share capital are not changing. That's the big difference from the earlier example. And you know if you want to create a big buzz in the market, you will say 10 is to 1 split. So for every one share, now you will have 10. So you had 10 lakh shares, now you will have 1 crore shares. Face value will go from 10 rupees to 1 rupee. Nothing else changes. P ratio remains same, everything remains same. Earnings will go from 10 to 1. Stock price will go from 200 to 20, and people will feel wealthier because they feel that they have more stocks with them now. So impact on investor uh, is basically nothing. Even if you compare them side by side, 1 is to 1 bonus, 2 is to 1 stock split, uh, nothing changes as such. Price per share changes, number of shares owned changes, no change in ownership value, no change in real benefit as such. But psychologically, it's a great game to play. And in some genuine cases, you also infuse more liquidity in the system. So let's say some stock is 10,000 or 50,000 rupees, and you split it 10 to 1. Now it will become 5,000, and more people will be able to buy at least one stock of that. So illusion is the game in bonus shares. Illusion of free wealth. So companies know that giving free shares feels rewarding. It will create good sentiment. You talk to old timers, they'll tell you, how ITC has given so many bonuses, how Levers has given so many bonuses, so on and so forth. The number of shares kept on increasing. Well, if they didn't do that, they would have given out dividends, or they would have rather put that money back into the business. So nothing great that is getting done by this, but it creates a buzz. It creates a hype without really having any substance. Uh, Similarly, in stock splits, the perception of affordability comes. So a lot of folks like cheaper stock. So they may not buy a 500 rupee stock, but they will buy a 50 rupee stock for whatever reason. People in their minds think that a 50 rupee stock can go to 500, but 500 rupee stock cannot go to 5,000. In their minds, they think that way. But the experience that I can think of, I think larger price stocks move much more swiftly. Of course, some short-term speculation is easier for people who try to operate stocks, but more often than not, the serious investors continue to be there in pricier stocks where the retail does not enter, and investors feel rich holding more shares even though portfolio value hasn't changed, and short-term buzz gets created in splits. So this is the game of bonuses and splits. Let me know in the comments about your thoughts on this. Have you ever been sort of victim to such information that company announced a bonus and in the next morning you jumped in with a large buy position only to find out that this was a one day pop and it really did not materialize into any gain of that sorts. Thank you so much for watching these videos. Do like and share these videos and do subscribe to the channel. Thank you. Bye.